Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. Interesting. Last update on this thing was 4/6. What was that? That was Thursday. I guess Friday was a holiday, so I guess that makes sense. But I would have thought this thing would have been updated through the weekend. Anyway, what's the date we have here? The 6th? Friday was a full holiday, eh? Yeah. Anyway. Welcome back to the frivolity, everyone. It's Monday. It's kind of a weird sort of semi-holiday today. I don't know if I can believe too much in what I'm seeing in the market here today. But having said that, we'll do our little summary video and then head on over and have a little chat in the after party with TRI site members. Hopefully give you some good value for your subscription. And maybe if we're lucky, show you a half decent idea or two that might perk your interest. And also maybe take a look at some of the dashboard data and whether it can help you make informed decisions in the marketplace. So it is interesting to see. I mean, we don't really have a breakdown here yet in the S&P 500 from the breadth. I did the headlines reading this morning. U.S. stocks kick off the week in the red. You can see we got the NASDAQ down a good 1.5%. Tech has been kind of heavy here lately. We have the first 2 weeks of the quarter study that we'll keep an eye on. We'll probably compare how the data from the week last week, which was a shortened week with the holiday, with also this week, and then probably what would be a good idea is just to keep an eye on if the data shifts at all heading into the big monthly options expiry. But it's Monday. Of course, also too, tax deadlines coming up here as well. So there's probably a bit of that. And if I understand correctly, Chris was saying that the good people of Spain, who are predominantly Roman Catholic, are still on holiday. It's like technically Easter Monday, right? Is that how it goes? I can't remember. Something like that. Like I said, kind of a funny day. Maybe call it like a bank holiday. I don't know. I did see the futures were open, but I didn't really have any levels that I really was focused in on. If anything, what I want to show you guys, sort of demonstrate our best practices, just going through checklists. Semi-holiday was my note here today. Econs around the world. Like I said, week started off with, I think what happened was that there was an employment report that came out very early Friday morning, and all the indexes sort of jumped up on that report. And now you're actually seeing the sort of real reaction from the market after they've had the weekend to digest the data. And I get the impression that, the banksters, Mr. Powell, and the powers that be would like to try and slow the economy down. The only way they can really do that is through increasing the cost of borrowing on the short end of the curve. And we talked about it lots in the broiler chicken show yesterday, but just sort of a refresher. He's done some major damage in the one part or the one sector of the economy that actually he can really control, and that is the financial services sector. And actually, you want a real, and I made reference to this yesterday, so by all means. Should be able to find it, but this gentleman here, very good report. I'll put it again in the lounge in case you missed it yesterday. But excellent commentary on how Mr. Powell is he's causing a lot of heartache, and ironically enough, the one sector of the economy that he's supposed to be sort of most chummy with. But at the same time, too, if inflation is actually running hotter than things like average, earnings increases, then technically the American workers are going backwards in their standard of living, going backwards in their purchasing power, and of course, this is a consumer-based economy. So he does not like to see that inflation is above sort of workers' wage increases, I guess. Anyway, I guess just the simple message here is that he is going to, and it is happening. He's generating losses in the financial services sector. You're watching some banks actually blow up here. And the question ultimately is, does this translate into a hard landing? Or does it transition into a soft landing? And of course, that's the $64,000 question. I would make the argument that, uh, I would first say that this image, and this unfortunately is exactly what the public sees, this isn't real. The irony of it all, and I was joking with somebody this morning, we were kind of looking at this is kind of a bit of a historical. But I think we were looking at this. I mean, there's your real image. You could make the argument that stocks today are actually the same price as stocks were back in April of 1996. So that's the shocking reality of this world. And that's what, inflating your currency does. Is you think that stock prices are so much higher, but in reality they're not. We're still, you could make the argument that we're still below prices from 9/11. And I might argue that this whole world that we've lived in, the basis was set with that 9/11 event. And the whole George Bush Jr. absolute, basically rape of an entire generation's wealth. Rumsfeld coming out and say, "Oh, we accidentally lost $1.2 trillion." Like, are you serious? I mean, that's rape. There's no doubt about it. And none of those people got held to account of it. And so we're still living in that recovery world. What does this new sort of, they completely mortgaged our futures. The value of the currency is collapsing in front of our eyes. You actually have people out in the world openly talking about abandoning the US dollar system, the whole fiat system. And of course, Klaus is sitting there going, great reset, let's change the rules, we're all going to be commies. Get used to it. This is our reality. I suppose the one good part about it is it does look to me like the old corn. We're starting out the week on a fairly up note. We had kind of conjectured yesterday whether we were going to get our third weekly doji in a row. It's pretty doji-ish, but actually we did finish up close to the upper end of the range. And actually I was even tweeting out images yesterday that, wow, this is one hell of a consolidation here. And it almost looks to me like there's like one big honkin' diamond pattern. And then we have like little diamond patterns sprinkled all within the big honkin' diamond pattern. Really drive you crazy. This is a really good example of you cannot push a chain and you just have to let it play itself out. And I'm sure there's a lot of people that have been just chopped up right, left, and center through all this. So, the 4-hour sort of basis, we're starting our week. Still think this 31,000 bot target is still on the table. This 32,500 bot target is still on the table. Through yesterday's price action, we actually did go in and put in an actual W in price, and you can see higher highs and higher lows. They are working the market higher. How do we act back up against the top end of this megaphone and into these candle body highs and wicks? I'd like to be eaten and all that. I don't know. I was actually a bit surprised. Like I said, we've got the corn actually up here. Let's see, where are we here? So the wrapped corn is up about $100. It's not a huge move. There's the spot price over there on stamp. Yeah, just basically $100. I was a little surprised actually coming out of the gate here this morning, the gold market and the silver market, because silver was just on a tear there last week, but they're actually getting punched pretty hard here. So a little bit of a disconnect in that gold and Bitcoin as sort of inflation proxies, moving a little bit opposite directions here. As well as stock market, like I had sort of said there earlier, the knee-jerk reaction out of the stock market this morning, or Friday, because the futures markets were open for like about a half hour, 45 minutes after the jobs number, and then they closed for the weekend. But the futures market that's not really a very happy image, is it? So very disconnected message. I don't know whether I really believe that Bitcoin is breaking out or whether we're just rallying into upside resistance again. What a great testament, though. Like if you are a botter, you're long and you're just sort of sitting there every time we make a new higher closing low. I mean, could you have been flushed out on this had you taken this little guy? Maybe. This bigger one, I think, is still working, and that's painting that 31,000 number up there. But in essence, just keep painting higher closing highs. And you got to be watchful, very watchful in this kind of environment for like I don't even know what to call them. I, I'd say they're very serious. I mean, this is money, so whenever we're talking money, also, too, there's a lot of ego involved in all of this, especially with young men and the testosterone and all that shit. But you have to be mindful of these sort of FU moves in the market. And through these low volatility windows, that happens a lot. So anyway, probably, well, I guess that's a 4-hour chart. So anyway, it was encouraging to see this double bottom come in. At least it's got a bit of a base here to work with. So interesting also too on the profile. Some people have sort of asked me, Brian, why do you use this floating profile? All I really want to do is just ask what's the distribution of the volume in this particular range. We have just a little bit on here. I don't think it makes a big difference. Yeah, it's not huge. But you can see that value, right, where the POC is, it's been dragged up to the point where we got a lot of people, long and short, from this level. The shorts, of course, they'll all have their stops up here. So they'll be juicy targets if the bull takes over. And of course, those people that are long, they probably have their stops down here. So in a weird sort of way, you can kind of see that profile. That's a very, very sort of steep POC, if you will. But kind of what I posted here based on Mr. Hoagland, we should really see a replication of this kind of pattern here all the way up here, which again validates the 31, 32 and a half targets. So that's my inclination, my gut, but so what? It's just opinion. Doesn't really mean much. Trade your setups, go slowly. And, I can't reiterate enough. We're basically just in 3 or 4 days of just hurry up, or weeks, beg your pardon, just now, the better part of a month now of just hurry up and wait. Did notice we had on these shorts from way back when. I guess everybody's forgotten about Mr. Nancy. I don't know if anybody talks about Mr. Nancy anymore. And, this is, if anything, is a really great analogy of a trader's life where nothing has really changed here. We strapped on the original short up there, Brian's favorite fib, 78.6. You know how much I love that. Right up against the trend line. On an initial profit objective, 2-to-1 risk rewards, all that kind of fun stuff. You take half of the profits. Move your stop to scratch on the remaining, and really this has just been a big hurry up and do nothing here. Position's still in the money, and if anything, I like the fact that we failed right at this trend line here. And really, there's not really a hell of a lot to do. And you look at that kind of image, and my hunch is probably on divergences. Yep, you can see the divs. Willie is officially stupid. So, you could make the argument we're probably setting up a new short up top here. And then, like I had showed you there earlier, if you look at the stock market, gee whiz, look at that, eh? And really, you might argue Apple is a huge component in these indexes, so not a big surprise that the Apple chart and the S&P chart look very similar. So this chart is just it's skating on thin ice here. Well, that's probably the easiest way to describe it. And if we go and break down through these lows, then I got a sneaky suspicion that that's going to start triggering. No, that's not what I wanted. That's going to start triggering. What the hell was I thinking? I guess over here. I guess maybe it's this page. Hey, there we go. This to roll over. And does that actually go in M out? And if it does, then uh-oh. You know, the cliche is sell in May and walk away. But I've seen plenty of times, especially in this environment, I'm hearing it from everybody that unfortunately, you know, for the past 20, 30 years, we actually had an environment where government was kind of on its heels. It was kind of on its knees. There's like taxpayer revolts. I remember in the 1990s in Canada, for example, huge tax increases, and then there was huge taxpayer revolts. And so they kind of, you know, taxman and all that kind of stuff kind of quieted down. But I see, you know, especially following this whole COVID experience, that what's ended up happening is governments have almost sort of been like reawoken, and they are back on the war path, and they're like literally declaring war on their citizens. I mean, you see what Vladdy's doing to poor Russians. God, whole generation just being literally thrown into a meat grinder. And that's the hallmark of this part of the cycle, is that, you know, individuals' rights, human rights, all that kind of stuff just goes by the wayside. So it's a challenge. Somebody asked me yesterday, you know, what do you think about this? Why do you think that this is such a tough time to be a participant in the market? And I can tell you, you know, like back in the 90s, I think I was telling you about this little guy, Gessler, who's in charge of the SEC right now. I mean, 20, 30 years ago when, you know, guys like Arthur Levitt and stuff like that were in charge of the SEC, they did nothing. You know, and the whole, you know, George Bush Jr.'s joke of a, you know, U.S. housing market, and watch The Big Short if you want lots more information on that. How the credit agencies completely sold the public out, and we're just basically puppets of the corporations. And it was all just stunningly fraudulent. And yet, the regulators didn't do anything. If anything, you might even argue the regulators were in on it. And now, all of a sudden, oh yeah, now we need to wage war on the crypto kids, because that's the real problem in our society. Oh, goodness. Anyway, I suppose it's a Monday morning, so not a bad time to rant. And it's also a fairly quiet market state. Congratulations to crypto kids through the weekend. There was one name that I was in. Maybe I'm getting a little rusty in my old age. I don't know, but I know there was one particular name, and it, like, literally the moment I came back from Liam, I went into the lounge, and people were like, "Woo, banging out doubles! I'm such a badass! Look at me!" And I was like, "All right, well, I guess better throw my order in." And look at what they did to this damn thing. Typical crypto, typical venture capital. So, like, literally, I came back from Liam, like, right here. Oh, goodness. Terrible timing. And you can see this NKN. And I literally looked in the lounge, and people are like, "Banging on doubles! Oh, yeah! It's awesome! We're rich! Yeah! Whatever, boss." Actually, a couple people, "Thanks, Brian! Oh, this was such a great idea! Hugs and kisses! I'm going to name my firstborn son after you." Right, and all that. I put my order in, and the goddamn thing just collapses. So, typical crypto. I'm sure there was some sort of pump and dump. I don't know whether it's a scam or not, but oh well. Still have my order working. And if anything, We say wicks and tails like to be eaten. So you saw what happened here. And it took about a month or two for the damn thing to calm down and clean itself back up and then take another run up top. Good part about it is you can see it is on increasing volume. Um, but unfortunately, I missed my double there, knucklehead. Anyway, the order is working now. But congratulations to all the people at TRI that banged out a nice big fat win on that one. That was fun. I think Chris said that he was active in the gold market or the oil market this morning on the opening range trade.
In both, actually.
Hey, there you go. So that may be kind of fun, just that you see what a typical day trader's life is. I asked Chris to just throw together. I don't know. Do you have like a screenshot or something of the trade or something that I can just throw
Uh,
on the screen?
yeah, I got a few screenshots actually. Let me
All right. Well,
send this
maybe
over to you.
if you just have like one, and then just if you could just walk us through what it is you did this morning, might be a good opportunity for you to see what a typical sort of day trader's life is in crude oil. What do you think, Chris? Do you feel like doing something? May kind of put him on the spot here this
Yeah,
morning,
I'm
man.
actually looking for the exact screenshot I sent.
Did you PM it me on the site or something? What did you do?
Let's see. I actually put it in a different location. I sent it to a buddy of mine
The
that
message request. Oh, Hafed sent me a message. What did he say? Sector rotation study first week. Thank you, Hafed. I'm a little leery, and this is what Hafed just sent me, and this is what I absolutely love. Excuse me. Three today. About our TRI community is we all work together. Hafed, I think, is one of our. We'll give him a big wave. Hey, Hafed, you're awesome. And he's sending me sector rotation information. I'm a little leery about just buying into this too heavily here today because last week was kind of a weird holiday week. So I'm going to reserve judgment until the end of this week, and then we'll compare them. But thank you, Hafen. If anything, I'll use your post as the first week. Let's see. Here's Chris. Chris has sent me some screenshots. Do we want to just sort of walk through them one by one, or what do you want to do here?
I was muted. I was saying, yeah, start from the last one I sent you because that's actually like the 30-minute time
All
frame, and that's kind of
right.
where I start my day trading day off of.
Let's see what we got here. If I go boom, boom. All right. So what are we looking at here? There's crude oil, 30-minute chart on the NYMEX. This is the market open here this morning.
Correct. You want to take a look at that 9 o'clock candle right there, that green candle with the two little lines there. A
Oh,
little
here
bit.
and
Yep,
here.
that's the one right there. Yep. I initially started this off on like the 1 minute, 3 minute chart. So those lines are very small for a 30-minute chart. But anyway, that opened on that candle there, opened right below the range from previous session, session being Thursday because Friday was a non-settlement day. So
Uh,
we opened up there, and that kind of gave me the green light to go ahead and take that opening range.
and the next
Second,
chart up is this the actual trade?
yeah, yeah,
All right. So let's see what we got here. So there is that first minute of trade.
yep, yep. There's that range low. You can see we opened just below it. So second candle there is the second minute of the opening there. And it wasn't until the third candle that I didn't get in on that trade.
Hmm.
Got in, didn't get a chance to get in if you didn't. And then I just kind of rode that up to 2 to 1, moved my stop at 1 to 1. And unfortunately, I didn't take a second profit target off of 4 to 1, which I like to do. I was trying to see if I could strap on a runner. Those are always fun to stay in throughout the entire session. So that last screenshot that I sent you is where I actually got out on my second contract. I only took 2 contracts out on this trade. Range itself was about 23 ticks. So the entire range risk was about 25 ticks. 2 contracts, 50 ticks. But anyway, so it came up to 4 to 1. And right as it was coming up, it started putting in some bearish divergence. I moved my stop according to 3 high low method as soon as we kind of popped that top there. I moved my stop just to cover and take profit if we did kind of reverse here, which we did. And that's where I just closed the trade out and walked away.
All right. Well, and hopefully you declared victory and give
Correct,
yourself a big
94
pat on the
ticks.
back. Well done.
Thank you, thank you.
Good, good. And actually, and you and another TRI site member are doing this together now, kind of as trading partners.
Yeah, well, I'm running this model. He's kind of running his own model, but Saleh, who I got a chance to meet up with over in Saudi, he's been my day trading partner since his days were actually around, I guess, 4 o'clock when the opening ranges occur over here on the East Coast and
Fantastic.
Mediterranean.
Good. Well, I love to hear number one. You can see from those screenshots, Chris got a very methodical approach to his setup and his plan. Followed his plan, executed accordingly, working with TRI site members, trying, what would we call them? Peers, I guess. Try and keep yourself on the straight and narrow. Quite often, it's really easy to get sort of derailed if you're just out on your own. So 1 + 1 = 3. Great to hear. Good job, sir. Thank you for that contribution today. What time is it? Well, that is 9:30. As I had sort of said, and I don't know whether I mentioned it, but I think I actually mentioned it in the video yesterday, but I'm in the middle of doing my taxes right now, and actually I had a kind of a scare. One or two of my accounts, I was a little bit frazzled. So, actually, I've not really done anything here today myself. So I thought I asked Chris, and hey, did you do anything in the market today? And he's like, "Yep." Interesting sort of. So thank you very much, Chris. Appreciate it. Interesting price action. Stock markets coming off here, and the U.S. dollar. Probably the thing that jumped out at me the most was how the U.S. dollar index itself jumped up smartly. The euro come off smartly. Japanese yen breaking down. I get the impression that the Asians are a little stressed out right now. China did another big sort of military exercise off the coast of Taiwan. Just saber rattling, trying to piss lots of people off, I guess. Retaliation for Taiwanese politicians meeting American politicians, which of course makes the Chinese, the CCP, Winnie the Pooh, all upset. Here nor there, but definitely added tension into the environment. So I do think that that's one of the big reasons why things like the yen and the Australian dollar were off smartly here overnight. But it's been collective, Swiss franc. Like I was actually quite surprised to see the way that the gold's coming off here. It's like $25 to the downside. That should technically be deflationary. And the employment report on Friday, like we said, initially it was received positively, but I'm getting the impression that this is actually a really really good example where good news for Main Street is not always good news for Wall Street. Why? Main Street, lots of jobs. Jobs number itself was fairly robust. The employment rate actually ticked down. Of course, all the baby boomers have now left the economy, so they're no longer part of the sort of employment pool. But if the employment rate ticked down and there was quite a few new jobs added, well, that's basically not doing what the Fed wants. And I thought it was interesting. I haven't really checked into it too much lately, but I'm not quite sure where I have it. But I actually tweeted out yesterday, just taking a good look at the money cycle. And actually, I was quite surprised to see that the euro dollars, which is the orange line here, this is the market's vote. And the market is actually voting for higher short term interest rates. So the Fed, by breaking down to new lows here. So euro dollars are breaking down, so there is no bottom. in the interest rate rising cycle yet. It looks to me like we still have another 4 months to go before we even get to the pivot of this sine wave. And I don't know whether you remember or not, but I remember distinctly in 2018, Donald Trump was specifically, and especially 2019, but he specifically started to criticize the U.S. Fed for having interest rates too high. But as you can see from the orange line is the market. The purple line is the actual Fed funds. You can see that the purple guys, the Feds, they actually follow the lead of the market. So Mr. Trump was bitching and complaining that interest rates were too high and that the cost of money was very expensive. And of course, he runs all his real estate stuff, which is heavily leveraged. And he was bitching about how interest rates he thought were too high. He was right. I mean, if you followed this sine wave, anytime after here, you should have expected at some point the interest rate market was going to calm down and go through sort of the cost of money falling. It just took quite a while, right? In fact, it took all into the sickness and all that nonsense to get the Fed to actually act. So we don't necessarily, at least I don't necessarily expect this to turn right on this event, but heading into it, I wouldn't expect this to bottom ahead of the event. If anything, it's probably going to take a month or two following this apex event to actually turn back up. And then, of course, we know Bitcoin halving is coming next spring. And usually Bitcoin price likes to bottom about 6 months ahead of that halving event. So the basic conclusion here, and this is what bothers me a little bit about this market state right now, is I actually think that we should expect a bottom in Bitcoin about 6 months ahead of the halving, and really that should be this fall. And that should come after the apex event is hit in the money cost of money cycle peaking. And that doesn't happen until another 4 or 5 months. So put it all together, I'm kind of like, there's just not a huge hurry to do anything in the market right now. Of course, if you're serious about making money in crypto, you can go and follow this shill person. And it's so funny. This is like literally a hack of Uniswap, and it's just asking for trouble. Like stuff like this is unless you know exactly what you're doing in this space, this kind of stuff is very, very dangerous. But of course, the kids, they'll make money, once, twice, three, four, five, six, 7 times. And then like the eighth or ninth time they try and it's gone. It's like, oh no. So we have no shortage of the shillers on Brian's Twitter page. Oh, well. So anyway, the whole message out of this was I don't think we're done with the interest rate rising cycle. And, if you actually read the headlines, right, they're basically saying, investors anticipate another Fed rate hike in May following Friday's non-farm payroll report. And the Bitcoin charts that I was putting out here recently, I think in the tweet, and I think we'll finish off this free video with this. Where are we here? We've got a bunch of fundamental drivers between now and the next FOMC meeting. This is like, I think it's the first week of May. So we've got like the Shanghai upgrade to ETH coming. We've got Mt. Gox and maybe the potential release of 140,000 Bitcoins. We've got Mr. Gessler and does he drop the bomb on CZ? And of course, I suppose we've got SBF and when does that trial officially get underway? So we've got a few moving parts. Probably the Shanghai and the Mt. Gox thing are the big ones that are sort of one reason why things have just really quieted down. I think people are just simply waiting on those events. So I'm not going to really read too much into this. I think we are sort of near the end of this move rather than the beginning. It is nice to see stocks are trying to firm up here. So we don't really want to see the market break down. Still like the idea of us working our way up into these 31, 32,000 event windows. Once that's happened, though, I'd be very leery about a heck of a lot more upside. So as a result, from 28,000, it's going to be tough. I mean, if the algo spits out a buy signal, then I'll go and buy. And the algo right now it could. I mean, if the market firms up and it's relatively happy into the end of the day, we might find that the algo does spit up a buy. You can see it's getting close. The crypto market is turning up, and of course, you crypto kids are making lots of money in those NKNs, etc. So, there's your report for a sort of a semi-holiday Monday. Unfortunately, I don't really have anything more definitive here to give you guys, but I hope you enjoyed that report. And we'll be back again tomorrow morning and hopefully give you some ideas to chew on here. And we might even, I doubt we'll have a buy signal here because these things are both moving up in unison right at the moment. But we'll just take it one day at a time, right? Okay, I think I'm going to leave it at that. PMA for the win. Slow and steady wins the race. If you want help building trading plans, and setting yourself up for the next great big crypto bull. We do have, a new school term starting in about 3 weeks. Get your trading plan, get your risk management plan, get your own individual risk, character assessment, who you are and what kind of behavior you should be espousing, considering your personality type. I think on balance, our program does a really good job of setting you up for success in that regard. And probably the last thing that I'll leave off with is kind of an interesting image that was shared with me with another, actually our marketing guy. And I know that Chris would like me to try and talk a little bit about this. Maybe I'll even think about it overnight and maybe do like an official spiel for tomorrow. But, do you have your together? Are you ready? Because these moves, you can already start to see the market trying to turn here. I mean, you never know what the hell the market's going to do here through these sort of bottoming windows. Go and read the blog. The blog does an excellent job of explaining step by step the why 23 should be a bottoming year. Great report from Josh. Very, very good report. I think I talked quite a bit about this in recent videos with you guys, so I don't think there's anything new here. But the point here is, and this was an extra image, and I don't think I've talked to you guys about this very much recently, but, we're so close to the next big honkin' cycle. So, unfortunately, don't end up looking back, and you see this darn thing's $100,000, $200,000 a piece, and you're like, I missed another cycle. You actually have to get your act together, get all the pieces in place. You could maybe think about leverage trading this. I mean, that's when you want to buy when everybody else is freaking out and saying Bitcoin's going to zero. I know there's a German guy that did fairly well in that regard. I mean, really what we want to see are the weekly W's. I don't know whether we have them yet or not. But then just, step in once those W's, kind of like what we did recently on Bitcoin with that weekly low. Just the point being, I suppose, here's another image of what I think the future's got in store for us over the next, I suppose, next 5-10 years. Stock market, Bitcoin, where we are right now. Are you ready for the future? And if you're not, well, we can help you get ready. It's not too difficult, but you got to plan. Hey, look at that. There goes Bitcoin. Bitcoin tastes great. All right, why don't we leave it at that? I've been blabbing away too much here. But hopefully I gave you some things to think about. PMA for the win. All the best. Hugs and kisses. The only thing left for me to say here is bye for now.